Lululemon is down over 15% on Friday after reporting earnings. Very, very bad. Year to date is down pretty close to 20%. I have to admit, I have never ever looked into Lululemon, but a lot of you have been asking me about the stock, so I decided to look into it, and I've been very, very impressed with the company. I was expecting something very terrible because of the massive performance of the share price, but I was completely wrong. It's an amazing company. I'm going to share with you what I found here in the video. I'm going to share with you my fair value because it could be the best company in the world, but if we buy it at an expensive price, we could still end up being a horrible investment. This is something that I always say. Or you could buy a junk company that's just a terrible company, but if you buy it at an amazing price, you could still end up being an amazing investment, even though the company is not the best in the world. In terms of earnings, they did pretty good on EPS, 529 versus 5 expected. Revenues, same thing on revenues. So they beat on EPS, they beat on revenues. Why did the stock go down? The stock went down because of guidance. Earnings per share, 14 to 14.20 versus 14.13, which is not a huge miss in terms of expectations for their fiscal year 2025, which should be 2024, but their fiscal year is 2025. It's not a huge miss, but this is what happens. This is the kind of moves you experience whenever you have a stock that's priced to perfection. And Lululemon was priced to perfection before the 15% decline, and I still believe it's somewhat overvalued. I'm going to tell you why at the end of the video, but it was just priced to perfection. And once you have a stock that's priced to perfection, even if they miss on 2 pennies or 1 penny, or something, anything that could upset shareholders or upset expectations because expectations are high. If expectations are not met with reality, then you have massive, massive moves to the downside, 15, 20, 25, 30%. And a lot of these moves are actually justified. Not all of them are an overreaction. But I'm not surprised that Lululemon is a little bit bearish on guidance. It's not just from them. Nike has the same thing. Gucci has the same thing. LVMH will likely experience the same thing, I believe, which is a company that I bought. And many different stores, even convenience stores, they're starting to experience some kind of a slowdown. So I'm not surprised that Lululemon is experiencing some kind of a slowdown in the United States. But the revenues outside the United States are still massively, massively growing. Over 9% growth in Americas, but over 54% growth in international revenue, mainly from China. Americas is 7%. Mainland China, 56% comparable sales growth. Amazing, 56%. Rest of the world is around 32%. Massive, massive growth. But most of their revenue still comes from Americas, 79%. 10% is from mainland China, and 11% is from the rest of the world. And you can see the trend from 2021 to 2023. Americas was 85%, now it's 79%. China was 7%, now it's 10%. So this is amazing, amazing growth for the companies. There's still so much potential outside the United States. There's still so much potential in expanding in different categories like footwear, which they did recently, and many different things within the brand. In terms of everything else, again, I'm extremely impressed with this company. I thought I would see very low same-store sales growth. I was wrong. Same-store sales growth are extremely impressive. I mean, 18%, 28%, 14%, around 8% expected for 2025. Another reason why the stock has been going down, which is fiscal year 2024. But to me, 8% from 14% is normal. The stock is going back to the mean. I mean, most retail stocks that I buy have 4, 5, 3, or maximum 6% same-store sales growth. And you have this company pulling in 14 and 18 and 28%. I mean, pretty shocking stuff, amazing stuff. And if they can keep 8% for the next few years, it would be amazing for something like Lululemon. Same thing with return on capital, very high returns on capital, around 38%, pretty close to 40% return on capital. I was expecting to see shares outstanding going up with stock-based compensation. A lot of these stocks that fly like that normally have massive stock-based compensation, but that was not the case with Lululemon. Again, stock-based compensation is low as a percentage of free cash flow, and you have shares outstanding going down, not actually going up, which is somewhat a bad thing because the company did buy back a lot of stock in the latest quarter, but they bought back a lot of stock sitting, I mean, at around $470 per share, which was like 37 or 38 times earnings. So buying back stock at any price is not valuable for shareholders. They have to buy back stock at the right price, at a price where they believe the company is undervalued. But if they just buy back stock at any price, then will destroy value for shareholders, and it will not actually create the value that you believe will create. In terms of cash and cash equivalent, is around $2.2 billion. Current liability is $1.6 billion, nothing major in terms of long-term debt. stockholders' equity 4.2 billion. So the balance sheet is very, very good. Around 2.2 billion in cash. Inventories have been declining. This is a good sign. This is what you want to see with retailers. Nike had this problem last year. Inventories kept increasing, and mainly from 2022. Lululemon has been decreasing, and this is a good sign whenever I'm looking at a lot of the retailers, which is very, very good. In terms of price to normalized earnings or price to earnings ratio, it's now sitting at 28.5 times earnings. The mean was 35. Before the massive decline, Lululemon was sitting at 34 times earnings for a retailer. Now sitting at 28.5 times, which look a little bit more fair. If you look at it on a historical average, you look at this line, it's a little bit more fair on a historical basis. But this is not enough for us to determine the fair value on Lululemon, which is why I'm getting into my own valuation model. And I have 12% from 2024, which is their fiscal year 2025, but I put it at 2024. So 12% from 2024 to 2028. Now, the analysts, they're expecting 12% for 2025, which is 2024, and then 10% for the next 4 years. Now, this is the first time where I disagree with the analysts. Because yes, I mean, I just don't see how the growth in China will go from 50% to like 10 or 12 or 30%. I just don't see it. I think the growth in China is amazing. The growth internationally is amazing. So this is why I believe even though sales might decline in Americas, the international sales are going to push up the stock around 10 to 12% revenue growth. And I'm much more comfortable using 12% revenue growth with Lululemon rather than 10%. So I decided to use 12%, same net income margin, 17%. The company is extremely profitable. I use 30 times earnings, which I believe is extremely expensive, but I'm trying to illustrate a point. So I use 30 times earnings. The mean was 36, and now it's at 28. And I used around 30 times earnings, 1% dividend, which is not a dividend, it's a 1% buyback yield. The company bought back around 1% of the market cap over the last 2 years. So I used 1%. In total, it's 78% on the upside. Now, even with this very bullish metrics, or very optimistic metrics, I should say, of 12% revenue growth, same net income margins, PE ratio at 30 times, which is somewhat high if the company is growing less than it was before, even with all these metrics, for a quality company like Lululemon, I would have to buy it at $357 per share to get it double. $357 per share is around a 13% decline from this price. And I'm not surprised if we see it within the next few weeks or the next few months. I just have to admit, I think Lululemon is an amazing company, high quality stock, amazing metrics, but I believe the company is overvalued. And you also have the risk of consumer preferences shifting. So maybe Lululemon is trending right now, or it's been trending for the last 2 or 3 years. Maybe in the next few years, something new will be trending, and people will not buy the Lululemon stuff, and they will try something else. Or some girl on TikTok wears something, and everyone wants to do the same thing. I mean, this is what happens. Look at the Stanley Cup, how it just got popular out of nowhere, and most of them, they don't even know who makes the Stanley Cups. And this is how these trends begin. So you have this massive, massive risk, and I'm not willing to pay 28 and 30 times earnings for this massive, massive risk. Yes, the company has been around for a long time, I think around 25 or 30 years. So this is not a new company, and they have many different categories, many different items that a lot of people like. But to me, I'm not willing to overpay for something like Lululemon. I'd rather do that with a tech company than do it with some retailer like Lululemon. So if I had to buy the stock, I would not be paying more than my double price to get a double, which is around $357 per share. I wouldn't be surprised if we get there anytime soon. And this is just my opinion on the stock. It was not financial advice. So thank you for watching the video. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.